Once again, we're seeing the magic of the weekly vertical crossovers. Stocks are down for the day, both the S&P 500 and the NASDAQ 100. We see TLT 20-year bonds up. We see gold up quite nicely at 0.83%. You're listening to the daily review from chartingwealth.com for Thursday, the 15th of November, 2018. Let's jump first into the weekly chart on the S&P 500. Remember, we had that weekly vertical crossover going down back on Friday, the 12th of October. We had 4 weeks of strong down movement up over the prior week. That was the week ending the 9th of November. So far this week, we have a red spinning top, which means indecision, tending down. The derivative oscillator is losing a little bit of downward momentum, but that price percent oscillator has kinked over, heading down strongly. We go from the weekly chart, and for the record, the S&P 500 down for the day 0.68%. We see the latest candle that has been drawn is a red down candle with a wick on the bottom, no top wick. That again portends, and well, it shows us a strong down movement over the last 2 days. We finally see what was almost a laminated price percent oscillator dropping away from the red signal line. That's a price percent oscillator. Derivative oscillators gained a little bit of upward momentum. We go from the 2-day chart to the 4-hour, and of course that's where we see the magic. We continue to see strong down movement. We had one 4-hour period, and that was the morning of Tuesday where things sort of perked up a little bit, but the rest of the time, strong down movement. Remember, we had that crossover on Monday afternoon. We looked for a jumping in point on Tuesday morning, and we really had it there in the afternoon, and then of course things moved on down since then, looking quite nice. Again, just more of the magic of the weekly vertical crossover. Remember, all things being equal, the market tends to move in the direction of the largest chart, and we have both our 2-day and our weekly moving down. Now, the thing to always remember is the trend is your friend, but the one thing you rarely hear is until the end. So we don't want to jump into a trend that's ending. That's why we use both our 2-day and our weekly, and then our 4-hour that acts as a trigger chart. So we're always checking in on that. And again, when you've got strong trends that you can follow, things work out for you. Typically, not always, but most of the time. That's what we're looking for, is we're looking for that edge, and that's what trend following gives us, understanding these charts. Now, let's talk about where the S&P 500 is, down 0.76% for the day. Remember, we had that weekly vertical crossover back on the 21st of September, and then things just slid sideways for 2 more weeks and then started dropping down strong back on the 12th of October, down for 4 weeks. And then over the prior week ending the 9th of November, just sort of a green spinning top, indecision tending up. And so far this week, a nice red down candle with a wick on the bottom. Price percent oscillator is heading down stronger than it was in the prior week. Derivative oscillator still lost a little bit of energy. We go from the weekly to the 2-day. What do we see there? Well, we see, again, derivative oscillator has lost a little bit of upward momentum. Price percent oscillator heading down quite nicely. And again, this latest candle that has formed is a red down candle, a nice size red down candle, looking strong. We go from the 2-day to the 4-hour. Pay attention to this a lot. What we see is down movement in the morning and stronger down movement in the afternoon. Derivative oscillator heading down, price percent oscillator heading down. And of course, we had a great easy entry point on this because we had a crossover signal in the morning, which means you have a jumping in point in the afternoon. So again, things have worked out quite nicely on this latest down play. Now again, those of you who say, what is this guy talking about? Why would you jump in to an ETF that's going down in value? Well, instead of switching things up and confusing it, we look at the primary ETF. That is the NASDAQ 100 in this case. You do have the ability, however, to find an inverse ETF, PSQ. It's ProShares short of the NASDAQ 100. And of course, what does it do? It moves percentage for percentage. That's the way it's set up to move, and typically moves very close to that in opposition to the Qs to the NASDAQ 100. So that's what we're talking about. That's what we're looking at as far as jumping in on a practice trade in an inverse fund. Please check out our training. It's, I think, our second most popular video that we've put out. The most popular is the Heikin Ashi candlestick training. This one is called Inverse ETFs, How to Make Money When Markets Crash. So check that out. It'll give you what you need to know and understand about inverse ETFs. Now let's jump lastly into bonds and gold. 20-year bonds, what do we see happening? We're going to go to the weekly chart, of course. Always start with the big chart, work your way to the smallest. What do we see as far as the big trend goes? Well, we're still in a confirmed down move on the weekly. So far, we've got a green open box candle for the week, pushing through the weekly trend line. Still, the derivative oscillator's negative, losing downward momentum. Price percent oscillator heading up, but doesn't look like it'll cross over this week. Two-day chart has already crossed over. That happened on the two-day candle ending on Monday the 12th. And of course, this latest two-day candle has pushed through that weekly trend line. So we don't have a trade at this time on TLT because the two-day is up. That is our mid-range chart. And the long-range chart, the weekly is down. Remember, both charts have to be moving in the same direction before we can look at a jumping in point on the 4-hour candle. Of course, that 4-hour chart was sort of some indecision, tending down in the morning, but popped up in the afternoon. Not up a lot, 0.06% for the day. But again, we'll wait for TLT to sort itself out and give us some trend analysis that we can hopefully rely on. So we go from bonds to gold. Now, we were hoping on that weekly chart that gold was going to bottom out and really move up strongly at about $112.50, something like that, $112.50. And it did reverse and move up nicely for 3 weeks. But over the last going on 3 weeks now, it is peaked out, slid sideways, and started moving down. Derivative oscillators losing upward momentum, and the price percent oscillator still barely heading up, mostly sideways, but we see a red down candle, a solid box red down candle, no wick on top, just a wick on the bottom, again portending stronger down movement. Gold was up for the day, 0.83%. But this is what the Heikin Ashi candlestick is showing us, average pace. Now we look at the two-day candle. Of course, we had a crossover going down on the two-day candle ending on Monday the 12th. That's representing Friday and Monday. Tuesday and Wednesday, we have a green up candle. But again, derivative oscillator still negative. Price percent oscillator still heading down. So we have the weekly in a confirmed up move, the two-day in a down move, and then we go to the 4-hour chart. And again, hopefully, we talked about this yesterday, we're at a bottom here around 113.63. And again, we'll see if that movement continues. There was some up movement in the afternoon made up for the down movement in the morning, whether or not things are going to cross over and start heading up and will give us a change in things. Maybe that two-day chart will change over, moving up. And at some point, we'll have a jumping in point for further up movement on gold. We shall wait and see. But again, we're enjoying watching the S&P 500 and the Qs move down in inverse plays right now. Hope that you are doing a practice trade on that. And of course, keeping up with your trade worksheets. They're available for free if you go to our show notes. If you're a subscriber, you can look in the email we send out every day. I do encourage you for free. Go to chartingwealth.com, sign up and be a subscriber. We'll send you the daily reviews, the weekly market reviews, special trainings we put out to our subscribers. And also, if you want to be kind, help our metrics out, subscribe to our YouTube channel too. You can find us on Facebook, Twitter, and of course, YouTube. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Don't forget to buy the book. And if you really appreciate what we do, become a Patreon sponsor. All sorts of great benefits. Check out the link to Patreon, and you'll see all the great things, including if you're at that mid-level, we make a 15-minute call to you once a month to check up on your training. If you're at the lowest level, we also have a special Q&A that we do every month with you, where we'll review some of the stocks you ask us to look at and help figure out if they're trackable or not. So you can practice trade those too. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.